want to get a real read on employment, I always like to check in with Paychex. That's the payroll processor and outsourced human resources play. It mainly serves small and medium-sized businesses. This morning, Paychex reported a modest top and bottom line beat. Management raising the midpoint of the full-year earnings forecast for the second quarter in a row. So far, so good. But when some of these analysts dug down, they saw things they didn't like. The company's management solutions business narrowly missed its revenue estimates. They said the full-year revenue outlook could come in closer to the low end of their previous forecast. I wouldn't be sure about that. But that is why the stock got hit today. Although, then again, Paychex tends to sell off on earnings even when the quarter's pristine. So let's dig deep with John Gibson. He's the president and CEO of Paychex. To learn more, Mr. Gibson, welcome back to Mad Money.
Jim, happy Hanukkah and holidays to you and all your viewers.
Well,
great to be with you.
Thank you, and right back at you. Now, I know I read through all the analyst commentary, and all I could think of was that you had 18% revenue growth, earnings per share up 11%, generated a huge amount of free cash flow, and 38% increase year to date. And it was an extraordinarily good quarter. Maybe I'm reading a different quarter from some of these negativists.
Well, Jim, as you said, this happens a lot, and I got to tell you, I'm only halfway through your book, so I'm not sure I can even explain. I'm a slow reader.
Thank you.
But to your point, we had a strong first half in the fiscal year. We delivered solid earnings, 18% revenue growth. We continue to demonstrate we're the best operators in the industry with the operating income. We actually raised earnings per share guidance again. This is the second time this year because we continue to get more confidence in the execution of our strategic plan. So client and revenue retention remains solid. As I said, our full-service HR outsourcing business, our PO business, continues to perform exceptionally well. And quite frankly, we've just never been better positioned, I think, to capitalize on the market opportunities to both drive growth, I think continue to expand margins, and really strengthen our leadership position in really what is now an AI era for our human capital management industry.
Okay, so let's go over the Paycor acquisition, which I thought was a terrific idea, still do. Some analysts were talking about the moderating inside Paychex, the growth is moderating Paycor. I again couldn't see that, but maybe you can explain what they were seeing, or I just didn't get it.
Yeah, Jim, look, first I will say there's a lot of confusion with the analysts in trying to understand the numbers. Remember, when we purchased Paycor back in January, we announced, and in April, we fully integrated Paychex's enterprise business into the Paycor brand. And so we've commingled a lot of things. And so they're trying to do comparisons back and forth. That being said, we continue to make good progress on the Paycor integration. We remain on track to achieve the revenue synergy targets we set out for the fiscal year. We now expect $100 million in cost synergies for the fiscal year. We started with a commitment of 80. We've raised that both quarters. We're very happy with the activity we're seeing, the bookings we continue to see quarter over quarter in our enterprise marketplace. And so, again, we feel good about where we are. We understand there's some confusion in the numbers. And I think as all of this gets sorted out, I think what everyone's going to understand that Paychex and Paycor are better together and that this has really expanded our runway. It expanded our market opportunity, $10 billion. And I think the cross-sell opportunity we have of our HR advisory solutions into Paycor's client base is just beginning, and we continue to build momentum.
No, at the same time, I also think that there's this perception that your businesses, small, medium-sized businesses, will be hurt employment growth by AI. It's actually the opposite from what I can tell. The businesses that are most insulated from that are small, medium-sized. The large ones, I don't know. If I were doing a large, I'd be worried that maybe there's some places where AI can replace workers. But at your level, workers can replace workers, not AI.
You're absolutely right, Jim. But I would even say I'm not sure I even buy into this concept that AI is going to lead to mass unemployment. The fact of the matter is tech does not destroy jobs. It evolves them. You go back and look at all the technological revolutions that we've had. We've continued to evolve. Now, I think it's true when you have disruptions. One of the things that we know happens, a Fed study would say, there's about 2 times increase in the number of new business starts. Guess who does most new business starts? Paychex. And we are less exposed from an AI risk perspective if this would happen. I don't think it will, but if it does, 70% of our clients are blue and gray collar workers. Think plumbers, electricians, restaurants. And 95% of our clients are in basically companies that are less than 100 employees. So we really feel that we don't think small businesses are going to be impacted as much, both because of our composition, but we don't necessarily buy into this AI is going to be a big job killer like many people believe.
Okay, so let's deal with reality. I think business seems to really be good. Small, medium-sized business seems to be strong in the country. That I still see businesses being created. It's not, of course, everyone would like the Fed to cut because there's some businesses that are really hurting. But you're not seeing any diminution in the starting of small businesses, are you?
No. Look, I think when you step back at a macro basis, our small business job index really has remained relatively stable in 2025. We also see continued moderation in wage inflation. What we reported today is our same store workforce levels for our clients. Now that's more broadly across our entire base, not just the small market, which is 50 employees and less. That's essentially flat for the quarter. What we see is continued challenges, particularly in the small end of the market, finding qualified employees. The other thing I will tell you, Jim, is of course there's businesses are trying to manage their costs, and that's one of the things we reported today as well. One of the things that we've seen thus far is that a lot of our clients are not buying as many of our ancillary attachment products as what we expected for the quarter, and that led to some of the guidance discussions that we had today. But overall, small businesses are healthy. I think the macro environment is solid. We see no signs of recession, and I think going into 2026 with some tax clarity, interest rates, as you mentioned, beginning to ease, I think we have some things to look forward to.
Yep. Is there anything in the big, beautiful bill that people would say, listen, I got to call Paychex, figure this out, how it's impacting me?
Oh, my goodness. So no tax on tips. That's going to be a good one for us. You're trying to figure that out and then trying to help every one of our clients' employees fill out the right forms so they can get credit. Now, we've got 1 year kind of grace period, but I think as we go into 26, that's going to be an opportunity for us.
And then I know you're involved with the Federal Reserve. Have you told them, look, there are possibilities of a slowdown? We've got to be aware of it?
I think what I've relayed to the Fed is what I've relayed to you, which is what we continue to see as moderation, that labor growth in small businesses is solid, but not as strong as it was last year. And the things that I continue to see is small businesses trying to manage their cost. And so I do think that the Fed, again, has taken actions to try to hedge their bets on the employment front. But at this time, Jim, we're not seeing any signs in our other data or indicators that would indicate some looming unemployment issue or some recession.
All right, that's very good. That's what I wanted to hear, because that keeps me from saying, listen, you got to sell a lot of stocks. If you were to tell me otherwise, then I'd have to rethink, because you have the best display of everything in front of you. I want to thank John Gibson, President and CEO of Paychex. John, thank you for coming on the show.
Thanks for having me, Jim. Happy holidays.
Oh, thank you. You too. Mad Money's back in for the break.
Coming up, you called in looking for answers on Cura Oncology. And after a night of studying, Cramer is ready to deliver his report on the biopharmaceutical company. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.